The area of environmental, social and governance investing, or ESG, has become firmly embedded within the financial services industry as investors have recognised that the transition towards a sustainable world, which we are currently at the early stages of, will require significant amounts of investment, which means big opportunities. Whilst once considered a niche form of investing that required sacrificing returns in order to do good for the world, nowadays this has changed dramatically, with the outperformance of ESG-focused investments versus traditional investments continuing to disprove the outdated content of this statement. While this may be the case, there is a degree of extra legwork needed to educate oneself on the topic in order to have productive conversations with clients and to be able to offer the right investments which meet their requirements. Therefore, the question that one may ask is it worth investing time now to build up my knowledge in the area of ESG investing? And what more do I need to do to really make money from ESG? Although ESG has become a common buzzword in the world of investing, particularly in the last couple of years, it is surprising to know that a large proportion of investment advisors still do not know enough about the subject to enable them to feel comfortable talking about it with their client. A recent study by FESIF, the European Federation of Financial Advisors and Financial Intermediaries, showed that 57% of financial advisors surveyed said they could do with more help when discussing ESG matters with clients or customers. This lack of knowledge may be a key impediment to the growth of ESG investing, as some clients may not even be aware that they have the option to invest responsibly if it is not explained to them. Therefore, one of the key ways to make money in ESG comes by differentiating yourself as an investment advisor through an education process, which will enable you to engage in dialogue with your clients to make them aware of the options available to them across the entire scale of responsible investing. By engaging in productive conversations, you'll be able to understand your clients' ESG values and requirements and ultimately be able to offer the best solution that aligns with their values and at the same time delivers the strongest financial returns. This may be the distinguishing factor between you and your competitors who have not invested the time in building up their expertise in this area. Furthermore, the benefits of engaging with your current client base around ESG goes further when you think about the next generation of investors, which are their children and grandchildren. It is the millennial generation, those born in the period ranging from the early 1980s to mid-1990s, which will be inheriting wealth from their parents and grandparents, and most likely inclined to maintain the same relationship with the investment advisor who has gained the trust of their family members. Since it is this millennial generation that has been influential in driving the growth in ESG investing thus far, it is reasonable to assume they will maintain this relationship with the investment advisor who has a comprehensive knowledge of ESG investments and already has investment options available to them. To further offset any doubt one may have that this investment of time won't pay off in the long term, research recently conducted by consultants PwC showed that there is a real business opportunity and chance to gain a competitive advantage in this area of investing. Their research showed that in a best-case scenario, ESG funds will experience a more than threefold jump in assets by 2025, increasing their share of the European fund sector from 15% to 57%. This is a massive opportunity and one certainly not to be missed. As we have highlighted, it is of paramount importance to be educated in the area of ESG investing in order to offer the best investment solutions to your clients. The point to remember, however, is that this is not a static market. Rather, it is ever evolving. So it is just as important to continue this education process to ensure you are well aware of the developments taking place. We have seen the strategies available to align investments to this theme grow and mature considerably in a very short space of time, from exclusions to best-in-class, ESG integration, engagement and impact, all areas we have spoken about in our previous videos. This highlights the complex nature of a client's ESG choices, which are only likely to expand in the coming years. As more investors are becoming aware of the opportunities within ESG investing, it may be that one needs to think more holistically in order to profit from the developments taking place in terms of making our planet more sustainable. For example, it may not be in the client's best interests from a financial perspective or from an ESG perspective to solely focus on divestment. Unfortunately, there is more often than not a willing buyer on the other side of a transaction who will purchase the unwanted assets. Taking a longer-term approach, one may consider investing in companies with already established distribution channels and strong intellectual property that could help them become the big leaders in the transition to a more sustainable world. This may include some of the big oil companies, for example, which may have been completely discarded as ESG investments in the past, but may in fact be the drivers of the energy transition thanks to already established infrastructure in place and legacy revenues helping to support bottom lines. These are also companies with the biggest voices which can advocate for progressive climate change policies, many of which are already investing heavily in renewable energy and low-carbon products and have committed to being net carbon neutral by 2050. While this point relates to the much-debated divestment versus engagement argument, it also highlights how there are many different options for investors to gain exposure to the ESG theme, so staying up to date with the developments in this space is crucial to ensure all options are explored. A critical aspect of this continual education process includes keeping up to date with regulation, which is progressing at a rapid pace with regards to ESG integration within the financial services industry. Staying up to date with changes in the regulatory environment can be a key differentiator for investment advisors and asset managers, making them well prepared for this added layer of due diligence that will need to be undertaken and putting them a step ahead of the field. Sustainability risk, which is the risk of fluctuation in the value of an investment due to ESG factors, is beginning to be taken much more seriously by regulators across the globe. Europe have been leaders in this ESG drive, with the European Union adopting the European Green Deal, which aims to make Europe climate neutral by 2050. Many initiatives are underway to achieve the 2050 goal, one of which relates directly to investment advisors and asset managers who, under amendments to UCITS, Undertakings for the Collective Investment in Transferable Securities, AIFMID, Alternative Investment Fund Managers Directive, and MiFID II, Markets in Financial Instruments Directive, will be required to take into account their clients' ESG preferences when assessing their investment objectives, which could include embedding ESG preferences into client fact finds and annual reviews. The Financial Conduct Authority is the UK's financial regulator, has also indicated that it will seek to mirror the European initiatives in ESG integration. These are just some of the steps being taken by regulators which are all pointing towards fully integrating ESG considerations within investments and will undoubtedly have a fundamental impact on the advice process. As the ESG-related regulatory environment continues to evolve at a pace, and new policies and initiatives emerge from countries across the globe, staying ahead of the curve in terms of implementing the necessary changes within your business is becoming more and more important in order to stay competitive, avoid risks, and ultimately make money from this growing push towards a more sustainable world. It is clear that the regulatory changes and societal shifts we are seeing are all pointing towards ESG investing as being a huge growth area in the years to come, and despite the rapid progress that has already been made, it is likely that momentum will only pick up from here. As investment advisors and asset managers, in order to make money from this area of investments and to continue to provide a service and proposition that meets the evolving needs of your clients, it is important that you are well aware of the developments taking place in the industry and changes to the regulatory landscape, which will have a material impact on the drivers of demand for your products and services. To truly benefit from this area of investing, it may require taking a holistic approach and being open-minded in order to uncover opportunities that many may not have considered. By taking all this into consideration and becoming leaders in the sustainable finance journey, you can feel more comfortable discussing this important subject with your clients, putting you in the best position to earn money from ESG investing and ultimately help future-proof your business.